thank you everybody for being here. My name is Norman Hallett, and I've been helping traders, mostly focusing on the mental and emotional issues for traders over the past 20 years. I've been in the business since 1979, where I was a math teacher and figured I'd do something a little different to start making money. And so I entered the world of finance and haven't looked back in over 40 years. So I'm going to share with you a few things today that I think that you're going to want to absorb, and I'll make you an offer at the end that I think a lot of you may want to take advantage of. But if you don't, still, you're going to find some of my suggestions here on the four main points that I think should be in every trading plan, and the four things that I think are key to success in the industry. So let's begin. I think you're going to want to grab a paper and pencil, or paper and pen. I guess you can either one, or you can open a window, but sometimes writing it down is the best in these kinds of things, because I'd really like to, we're going to go pretty quickly here. So let's get going. We only have about 40 minutes to do this. So I want to show you a four-step formula that's working really well to stay consistently profitable, so you can develop a steady income or build long-term wealth, or both. These two things are the things that I'm finding that I found over the 40 years most traders want. They want independence. They want to make their own decisions. They want time to be their own. But as far as what they do, as far as trading is concerned, to make that happen, steady income, especially for retired people that we help, and building long-term wealth for those that are in the building process. And of course, you can do both. So I'll wait a second as you grab a pen, and we'll get going. In fact, I'll wait 5 seconds. All right. Imagine this scenario. Imagine that. What if you suddenly found yourself building profit in your trading account month by month by month, resulting in your best trading year ever this year in 2021? And what if you suddenly woke up every morning excited about trading because you had a trading plan that actually worked? What if all of your dreams of financial independence and having your time be your own was the life that you were actually living? And I know that you've heard some of this before, and it may sound like a stretch to you. And I used to think so too, until I figured out why only 10% of traders were making money while the other 90% were financing that 10%. I mean, where do you think your money goes when you lose? It goes to the winners. And so those 90% literally are feeding the accounts of the 10%. In the past 4 decades, I've managed professional trading rooms where I've monitored the results of 60 professional traders at a time, over 300 in total, and saw exactly why some traders produce consistent profits while some couldn't get out of their own way. And I've used the exact same things that I'm about to show you to manage millions for well-off investors as a commodity trading advisor. And I used it during my 2 years as a commodity specialist for Payne Weber, and just recently revealed it to a group of new and experienced traders through my online training. So I want to make sure that you know 3 things. The things that allow all the success is having a simple trading plan with just 4 key parts. And before I get to that, I just want to quickly show you the 5th key part for me, and that's my wife Tisha, who's the creative director here. She has really, she's really the creator of the mental and emotional tools that we use to help traders be disciplined in their trading. And then we found that we were making traders disciplined in their trading, as that was our focus for the first 10 years of our online business, helping traders, the mental and emotional part. But we realized that a lot of traders had a lousy trading plan, which is where I've helped traders to develop trading plans and similar to the one that I'm about to show you how to construct. There's me in about 10 years ago. I look exactly the same now. In fact, I still fit in that suit. It was a discipline trader lifestyle event that we held down in Miami. I've met just about, there's me with John Person. I've met just about every trading guru out there because what I've done for years is a complement to people selling trading plans and so on in the mental and emotional part. And we're going to get into a little bit of that, but mostly really about building a trading plan. And here is, we do a lot of coaching right now. And here is a fella, Chris, who we coach usually 2-on-1. Tish and I actually get on a Skype, a Zoom call with our client, and we help them with not only their trading plan, if they would like us to do that, but other things in the mental and emotional arena. Look, everybody knows that there are traders who are making money, and there are some that are making big money. So exactly what are these 10% of traders doing that the other 90% aren't? From my experience, I can tell you that with authority, I can tell you that those who are making consistent money have paid attention to these 4 primary keys. In fact, there's an overall secret that encompasses these 4 primary keys that actually brings everything together and literally pulls you into trading success. And that overall secret is probably not what you think. It's not a particular technical tool like Fibonacci retracements or Bollinger Bands or clouds or candlestick analysis. It's having the ability to stick to your trading plan without wavering. And the best way to do that is to have a simple trading plan with elements that you understand and that you believe in. Without your inner understanding, unless nobody can give you a trading plan, and well, they can do it, and you've probably have had it done where you take somebody else's trading plan without really understanding how it was constructed or why it works. They'll have you back test and forward test it, and they'll show you the past results from their accounts, but you really don't understand how they got there. I mean, you kind of do, but not completely. You need to understand completely how a trading plan was constructed. This will lead you to believing in it, which will lead you to following the trading plan. Okay, so you got to understand what the elements are that are telling you to do things in your trading plan. Okay, let's get to the 4 primary keys that consistently successful traders make sure their trading plan contains. The primary key number 1 is to keep your losses small. Very small is even better. I did a poll one time about a year ago where I asked traders, one of the questions in the poll was, how many accounts have you had blown up? We're here now together, but how many accounts have you previously blown up? None, 1, less than 1. And the last answer was 5 or more. The majority of traders who, maybe I attract traders who have blown out accounts, but there are a lot of them out there. Over half had blown out 5 or more accounts. And I made this key number 1 because you've been told this before, but you're probably not doing it if you're blowing out accounts. You must keep your losses small, and very small is even better. We've all heard this before, but do we do it consistently? Look, trading is a risk business. If you don't take a risk, you won't have a reward. And the key is to keep that risk small, which doesn't mean that the reward has to be small. The most successful trading plans are designed with at least a 2-to-1 reward to risk ratio. Every time you are risking one integer, you're gaining 2. Okay, so you want to keep that as a minimum if you can into every trade. Okay, this way, even if your trading plan has a 55 or 60% successful trade rate, which most plans actually do, you'll be way ahead of the game. You don't even 50-50 on a 2-to-1 if you're winning a half or more. you'll do well over time. And again, that 1 in the 2-to-1 ratio has to be small, meaning no more than 2% of the total equity in your account. And 1% or 1.5%, that's even better. And if you find it tough to find trades with a 1 or 1.5% risk to the total equity of your account, sometimes you need to move down to a lower time frame, and hopefully your trading plan has been tested and works in lower time frames. And sometimes you need to stop trading and put more money in your account, because if you're risking more than 1 or 1.5%, 2 is the maximum on every trade, you're going to have enter into your mentality the fear of losing. Okay, so you need a 1 or 1% maximum risk on every trade. 2% maximum. 1 or 1.5% is even better. Why? Because when you keep your trading risk small, you ratchet down your stress level, and you'll be able to stick to your trading plan without wavering. Remember, I told you that the most important, the key that puts all of these keys together, the overall thing that you must do is be able to follow your trading plan without wavering. And this key, number 1 key, keeping the risk small, helps you ratchet down your stress level so that you'll be able to do just that. Which brings me to key number 2. Take what the market gives you. Now, take what the market gives you is the rallying call for scalpers. And a lot of you may not be scalpers out there. But it comes, giving them what the market, taking what the market gives you comes in many forms. But what it means is that you're taking a quick profit. If you don't ask much from the market, you'll be able to take profit more of the time. I mean, it just follows. Just keep putting small gains in your pocket, and it adds up. It just makes sense until you start looking at all the profit you left on the table when a market decides to run and you got out way too soon. I don't know if that ever happens to you, but it certainly happened to me a lot before I figured all of this out, and it happened to the people we work with before we showed them some of the points that we're showing you right now. Okay, it's good to take the short profit, of course, until you start looking at all the profit you left on the table when the market decides to run and you got out way too soon. And this feeling of, I should have stayed in, it starts gnawing at you, and you get pulled off your trading plan. That's not good. You start over trading to try to get back some of that money you left on the fictitious table. And that leads me to primary key number 3, which is let the market run. Okay, I skipped by the wait a second, but wait a second, because how can one key be to take the short profit, which meaning take what the market gives you, and another key be let the market run? And the answer is, I'll let you think about that. What is the answer to that? While I get the drink of water. Well, the answer to that is you have both in your trading plan. Have both in your trading plan. Okay? You see, if your trading plan accounts for only let the profit run, you have to leave room for it to run. And by room, I mean room to pull back during the run. I mean, a run goes up, 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 takes 3 steps up, comes down a step, and then makes a new high and keeps running. That's how a running market happens. But you got to leave room for it to pull back. And when the market pulls back, it may be actually reversing, giving back the gain that you made, sometimes most or all of it, sometimes even put you in a loss, resulting in you saying to yourself, why didn't I just take what the market gave me? So, and of course, this can result in revenge trading. I mean, you had that big profit, but you let it go because you gave it room, and you got to when you're letting a market run. You gave it room, and it can result in revenge trading. You want to get that back. And that's where you don't feel so bad. You try to get back what you gave up, which leads to, well, you know, big problems, big losses, blown out accounts. Okay? Some of the most successful trading plans I've ever seen, and there are not many of them, But some of the most successful ones that I've seen have both the ability to take a short profit and let the market run. And to do this, you've got to initiate your position with multiple contracts. If you're trading futures or Forex or options, and remember, what I'm telling you here in this entire presentation works for all markets. If you're trading futures or Forex or options or stock, or, well, in this particular example, if you're trading futures, Forex, and options, that means a minimum of 2 contracts, okay, multiple positions. If you trade stocks, that means, say, 2 lots of 100 shares or 2 lots of 50 shares. Those would be the minimum definition of multiple contracts or positions, whatever it is. If you have a very small account, 2 lots of 10 shares, whatever it is. You see, by following both keys, you'll stick to your trading plan, knowing that you've accounted for what the market gives you and the chance to grab a windfall if the market runs. Because in the end, 10% of consistently successful traders have a plan they can follow and they can believe. And because they believe, they can follow it without wavering. And by having both keys in your trading plan, the key to take a short profit and the key to let a market run, you take the questions and doubts out of your mind. No more chasing markets because you got out too soon. No more beating yourself up because you should have taken the easy money. From here on in, you're going to have a plan that plans for both. Okay? Let's get to our final key, number 4. The high probability trigger. You can call it what you want. Getting off to the right foot or getting off on the right foot, giving yourself a head start, whatever you call it, having a high probability trigger is a necessity for a long-term successful trader, in my opinion. And I've coached hundreds of traders and instructed thousands more from the stage and in classes. Getting off on the right foot, giving yourself a head start, not only helps you mentally, but allows you to have a high probability of taking that short profit and adhering to key number 2. Remember, key number 1 was keeping the risk short. Key number 2, take what the market gives you. Key number 3, let the market run. Key number 4, have a trigger, a high probability trigger. But whatever you call the high probability trigger, it means that when you enter a trade, you're going to do it with a high probability of winning. And how do you know that a trigger has a high probability of winning? You conceive it with technical logic. In other words, you've got to have a reason, a logical reason, okay, that you're doing it, that you have the trigger, and then you test it. In fact, let me show you a high probability, what a high probability trigger looks like. This is a high probability trigger tested by me and a couple of hundred traders who are now using this trigger in a simple trading plan that I created. Here's the trigger, and I'm going to take a sip of, let's all take a sip of water. Okay, here is a high probability trigger that you're going to want to get familiar with. And here is how it was conceived. And maybe it was because I have experience on the trading floor. And when it was all live and you're standing on the steps of the trading floor, waving your hands to buy or to sell, if the market was quiet, if the market got quiet when the market, we couldn't decide which way to take the market. There were equalizing factors. There was not much coming out. Maybe we were waiting for a report. But in a sense, this first, I hope you can see my arrow, but this first candle is called a spinner. Let me take you to this candle first, just to define those who may be new and don't know candlesticks. This is a green candle. This is a red candle. Green candle means the close during this 10-minute period. Each one of these candles show the timeline is the vertical timeline, and this is the timeline. This is the price line, vertical price line. This is the price that whatever market this is in went from in the 10-minute period. Here is where it opened during that 10-minute period, and here is where the clock hit 10 minutes and a new candle started, okay? So we know that because the candle is green and the body is green, and the body represents the distance between the open and the close. These wicks of the candles are the price action of the prices that were traded in this 10-minute period beyond the open and the close, okay? The Japanese who put together candlestick, and I agree with them. I guess they don't need my agreement. I mean, it was put together by Japanese farmers 300 or 400 years ago, maybe 500 years ago. That really the open and the close are the most important elements of this time, of a time period, because this is where the rubber meets the road. People had to make decisions on the open and close. And in this particular case, we have a red candle, which means the close was below the open. The open was here, the close was here, and most of the trades during that 10-minute period resulted in outside of the open and close range. So they tried to take it to one way or the other. Never really happened. And no, this is indecision. This is the point I'm making here. This candle shows indecision. Ultimate indecision would be if this was not red at all and it was just a line. That's called a doji. And when that happens, that's the perfect candle for what I'm about to describe to you. That's perfect indecision. It means that in this 10-minute period, the market went absolutely nowhere. And it's almost as good to have it almost go nowhere, where this candle represents with a small body, okay? So what I'm looking for in this trigger is indecision in whatever time period you're looking at. In this case, let's call it a 10-minute period. Indecision in a 10-minute, total indecision in a 10-minute period, followed by a pretty dramatic decision, a extended candle that shows that now all of a sudden the market has taken a direction, okay? When you have indecision followed by a decisive candle, and you have it go through a proprietary moving average, which we use, that is our buy signal. Okay, that is the trigger in this case to buy. Of course, if this was a red candle moving lower, that would be a signal to sell. I buy right at I actually have my finger on the mouse, and I'm waiting. I'm going to show you some charts in a second using this trigger. I always have my, when do you buy? The end of this? Do you buy when this bar closes, or do you buy at the open of the next bar? Your choice. I have my finger on the trigger. 58, 59, not 10. I'm hitting the market order. Okay, that's how I do it. There are some traders who like to put in a limit order right at that price. I'm not willing to miss the trade. Others sometimes get filled a little bit better. I want to get in on the trigger. So that is up to you. But what I'm showing you here is indecision followed by decision moving through a proprietary EMA, exponential moving average. Let's take a look at a chart. This is the S&P 500 from a few weeks ago when I first gave this presentation. You're looking at right here, let's look at this one first. This is the most obvious signal of one that I gave you. And I want you to, of course, notice how, and you know this already, southerly moves, short positions tend to mature much faster than long ones. Okay, but let's take a look at what's happening here. You have your indecision. In fact, two 10-minute, this is a 10-minute bar chart, two 10-minute, this is total indecision. When this happened, I was on alert. I'm looking for now to cross through the moving average. It didn't happen. And so, I'm on alert here. And when this bar started, I'm thinking, okay, maybe this will cross down below and I'll have a trade, okay? And it didn't happen. But what I did get was a spinner, and now I've got 20 minutes of indecision followed by a movement lower through the moving average. This was a sell here, okay? Now remember that I told you to always enter a trade with two positions. So here we are. Let's talk about selling two S&P contracts here. And for small accounts, there's a micro mini contract in the S&P that's very, very small. So you can really get into an action market and keep the risk very low, even in an account as low as $5,000 and $10,000. So we'll take that up on another seminar if you join me after this. But the idea here is that you're going from indecision to decision, and you're selling two positions right here, 2 contracts in the S&P right here. Now, what I do is I measure this extension, okay? I measure the extension and I put a limit order to buy back 1 contract. This is the scalp part. I put a limit order to buy back 1 contract at an equal extension, okay? And then I'm going to let the second one run. Now, I sell 2 upon the trigger being complete. Then I put my stop above the formation. In this case, the indecision part of the trigger was high, had a higher high than the extended bar, and so I'm putting my stop right in here to buy back 2. So I'm measuring my ultimate risk from here to here with 2 positions, and I'm making sure that's not over 2% of my account. Okay. Now, some would say, well, why don't you put? This is so close. I follow the rules, and so should you. Okay. So why not keep that? Sure, it may, but I have rules, and you follow it. That should be number 1A rule. Okay, key. So I put my limit order in. So the first thing I do is put my stop. First thing I do is get into the short trade, selling 2. Next thing I do is defend myself, put in the stop. Next thing I do is buy 1 here, or if I put on 4 positions, I'm buying 2 here, and at an equal distance to this extension, the body. Okay, I'm measuring the length of the body. I'm clicking on it, and I'm seeing where it opened, where it closed. I'm taking the difference, and I'm extending that difference from here, and I'm buying 1 back. And then when that is hit, when I take my scalp, I move the stop on the remaining position to break even. Okay? All right, so that's some of the basics of a simple trading plan. There are a lot more rules, especially the exit rules, where I can't go into right now. But the idea is that here you got out of your scalp position here, and you've let this run. And in this particular case, we would have been out in this area with one of our rules. And the rules of a simple trading plan, and the one I'm going to offer you at the end of this, is I like to have all my rules on 1 sheet of paper, and you're going to have all your entering. In fact, it's on half a sheet of paper. It's a simple trading plan, and you're going to love it. Okay, here I want to show you. Let's go back here. Here's one. Now here's indecision, some very small bodies, followed by a body that goes through our moving average. Now this doesn't look like a big body, but in comparison to the ones before, this is a more decisive move, okay? And the risk is short. And I ignore this, okay? A lot of you may not. I do, and I suggest that you do, because I think if you found this, I don't know if you know Steve Nissen. Steve Nissen mentioned, actually he was on stage with me years ago, and he followed me, and he mentioned this, that markets usually retrace after a movement like this. Anyway, I'll get into that in another. So I ignore this. Some people say, well, this is a positive signal, and it kind of is, but at the top of a move, it's actually negative. I ignore this. I'm only looking at the body, and this body is 4 times the size of this body, which is within the size rule that I have between measuring the size of this body and this body. So you're selling 2 here. You're selling short 2 here. You're putting in your stop to buy 2 right above the formation. You're putting in your limit to buy 1 right here. Now, you may say that's a pretty short take on a position, but I think the most important thing that you need to know is that this is not a big extension, so I'm not asking a lot from the market. The momentum is not quite what it is on this one. So it all makes sense. It needs to make logical sense to you. So I take a short profit here, let the other one run. And in this particular case, we would have been out right on this reversal. This is another signal, small, and we've reversed it here. So the first one, we made a profit from here to here. On the second half of the positions, or one, if you just had 2 positions, you're getting out here, so you had a little bit more profit on the second one. Here is right here. This is another signal. You're buying 2 here. You're putting your stop down here. Limit order to sell half positions here. and you're riding, you take it out, and then you're moving your stop to break even once you take the scalp, and you're moving higher. And here we're knocked out of the second position with this, as this market went down and took out our break-even position. Okay, so here's another one. Now here's a losing position if you took it, but this is a question mark, and it's not a question mark because I'm not trying to tell you there are no losers, because there aren't. But this is a very big candle. It's an inviting candle, to tell you the truth, because you just had a big movement lower, and then a response to that movement at right around the 60%, looks like about that 62% Fibonacci, somewhere in there. So this would be a nice signal if it happened to have lost, but again, not every trade would have lost. But most of the people with small accounts would not take this signal because the risk is too big. You're always measuring your risk, okay? You're looking for something like this on a maximum, something with a reasonable risk and something with a good profit potential. So you had another one here. Let's take a look at another chart. This is the euro-dollar chart. Okay, so it works on currencies. If you trade this is of course the euro-dollar against the U.S. dollar, but you can do this on any comparison. Here's your trigger. You take your scalp out here, move your stop to break even, and look at this run. And the more you start looking at charts, is this a signal? Is this a signal? It actually is, but there are reasons that one would take it or one not to take it, even though it did work out. Again, we have rules, but they're simple rules. This is a beautiful signal, right? Got a lot of small bodies. You've got the smallest indecision right next, and then a movement through the moving average that we like. And you got your scalp out here. You took your second profit here, equal to the scalp. Here's another one. All right, so that it works really, really well on the euro. I've been trading the Japanese yen very successfully recently. Here's Zoom. Zoom it's a lot of. This is a daily chart of Zoom. So those that trade day charts, this is great for you too. Here's a beautiful signal right here. Beautiful signal. Look at this move. All the way from 100. You would have been in on the movement. But sometimes you wake up and you see a chart, the present is already here, and you say, oh, geez, I wish I could have taken that signal. Well, here was another opportunity. This is one of my favorites, where you have a move up that was dramatic. You have a movement, a corrective movement, okay? And then you have a doji followed by a movement above the moving average. This is another beautiful move that you would have been in. In fact, you would not have exited in our system here. This original move would have been all the way to 500. So and this is in a month's period of time. You know how Zoom moved during the pandemic. But not again. You're taking your short profit, and then you're leaving it for what I call lewd and lascivious. Here's another signal right here. Small body through. We take the signal. Here's another one here. Incidentally, this one may not. Yeah, it looks like you would have gotten out of your scalp here. Move to break even, and you would have been break even on your second. Here's another position here. Again, another short win. This is BioNTech. This is the partner for the Pfizer. This is one that my wife turned me on to, and that we were in. Not in it right now, so I can tell you we're not in it anymore. But you can see how well it worked. Here's a position that you took the scalp but got knocked out of the runner. Here's one where you took the scalp and you had the runner. Here's one where you took the scalp and you had a little bit of a runner. You would have gotten out right in here. You had a short profit on the second one. Here's one that you may not have gotten into because the risk is too high. But if you had a large account, and if you had a $50,000 account and you wanted to try a few hundred shares, 150, 150, then go ahead and do it. You would have made out famously here. And here's the most recent move after the correction. So works really well with stocks, especially the active ones. And here's one that I wanted to show you. This is the Overstock is the name of the stock. If you're looking for a Bitcoin kind of a play, this this company, Overstock, is actually one of the leaders in putting together the basis of what this Bitcoins operate on. And you can see how well this signal turned out. Look at this. I mean, there's a lot of reasons to take this signal, but we take it because it's the trigger. A lot of people would have liked this channel. And look, it's a simple trading plan. You're waiting for this trigger. This is a trigger right here. This body's a little big. We have some parameters for that, but this is a long extension. And if you had the money to do it, if you had a large enough account, you would have been in on this. Here's another trigger on this stock that would have had you in the big move. So, and you would have been out actually in this area in our system. So beautiful stuff here. So let's review the 4 primary keys to put yourself in the 10% club. Okay, keep losses small. 2, take what the market gives you. Let the market run. Use a high probability trigger. Okay, those are the 4 things that you need to have in a trading plan if you want to be in the 10%. What I've just given you is an overview of an exact simple trading plan that I'd like you to own and try for yourself at my risk, because I want you to experience the same success that other owners are having. This simple trading plan, I call it loaded gun. And I call it loaded gun because of this trigger. I probably could have come up with a better name. My wife hates the name, but it's stuck, so I'm keeping it. And what it looks like is, of course, is a trigger, the small part here in the small candle, and then the barrel of the gun here. So that's why we call it. And it makes sense, you know, you're kind of shooting a gun, and there it's going to explode in the beginning, and that's where you take your scalp. So that's why we call it loaded gun. This simple trading plan, loaded gun, has that technically logical high probability trigger. I just explained what it was. Indecision to decision makes all the sense in the world. And the more you start looking at this and using it, but you got to know how to get out. I really didn't describe that to you. I can't give you everything in this short. I just need to give you the importance of what I've given you today, which is having the high probability trigger that gives you that head start on profitable trades. It gives you clear rules. My trading system will give you clear rules. Again, fits on one sheet of paper on how to keep your risk low, very low, so that you can move past any unsuccessful trades with ease and move on to the trades that are money makers, okay? And this simple trading plan will have you pocketing the low-hanging quick profits while also allowing profits to run to the big windfall gains like I've shown you. So that you're not chasing trades, you're not revenge trading, you're not screaming at yourself for not taking a profit when you had it, and you're not screaming at yourself for not letting a trade run. Just imagine finally having a simple, logically derived trading plan that can lead you to financial independence, where you can go where you want, do what you want, when you want, because your time is your own. Here is what the simple trading plan loaded gun looks like when you get in. Here's the deliver. Here's where I deliver the course to you. Okay, there's welcome. There's loaded gun explained, which gives you the details similar to what I've just shown you, only much more in and where you actually download the one sheet of paper trading plan, and then I go through a bunch of video examples. These are nuances. I just want to take about 30 seconds on this. Nuances, I know from working with traders that every trader is different. Someone trade a lot, and if they're waiting too long for a trade, you know, they get antsy. Some are very patient. They want to wait for the exact setup. Those are terrific traders too. There's no good, right or wrong, but there are nuances to this system that fit you and the personality. That's what these people love this, and it works because it allows you to stick to the trading plan, but in your own way, without taking away, with keeping the risk small and not taking away any of the profit. In fact, sometimes adding to it. And loaded gun get-togethers, these are every month we all get together, all the owners, and we discuss some of the things we're looking at, some of the things that seem to be working for us even better than what sometimes. And this is where sometimes I can add a rule. We have hundreds of people that are working with the trading plan, okay, and doing it very successfully. Okay, so this is subconscious training. Is kind of an ad for if you're not a disciplined trader, you can do. And we've got some bonuses. Look, this simple trading plan, loaded gun, is available for a limited time only for just one payment of $7.97. But I promised Anna that I would make a special price for those who attended this presentation today. I want to give you $300 off. $300 off. So that your investment for this simple trading plan that honors all 4 keys that I've gone through here, plus a lot more, is only one payment of $497. That's it. Or if you prefer, for the smaller accounts, I've even set up a 3 easy pay option for you. And this allows the smaller accounts, as I said, to get in on this too. Look, if you have a solid trading plan, smaller accounts become larger accounts. You would not be the first. So why not start with this plan? It's simple, it's logical, and I think you're going to see how well it works. And I want you to try your new loaded gun simple trading plan at no risk. And just like this plan is a simple plan, so is the guarantee. I want you to try this plan. Take a full 60 days to back test the plan. Then trade it in simulation. Trade it with real money. Do whatever you want for the 60 days. Okay? Try it for 2 months, and if it's not the plan for you, just email me and I'll refund your money. No reason needed. Okay, the risk is mine. Oh, what about an offer for, what's an offer without a bonus? If you act quickly, I am going to throw in a 30-minute one-on-one Zoom session with me where we'll go over any questions that you have about the loaded gun simple trading plan. I want you to look at the videos, and then we'll make a meeting. You'll go to my calendar and you'll make a meeting during that 60 days, and we'll go over exactly any questions you have about running the plan one-on-one. I say 30 minutes, some of them take an hour. Whatever's needed for you to understand fully the plan. This way, you'll fully understand the power and consistency of the plan, and you can go ahead and start experiencing what it's like to be part of the 10% of traders who take from that 90%. Here's Peter Orange. He said, I'm not sure if you read this, but I'm now using loaded gun exclusively. I thought my problem was psychological when in fact my system didn't work. I cannot thank you enough. He's also a coaching client now. We coach him in other ways, but he loves this system. You can see the success he's having. But you have to act fast because the one-on-one bonus and the special pricing is only good until 5 p.m. today, and that's not true. It's only good till 3 p.m. today. Right before this, my assistant mentioned to me, and rightfully so, that last night we just put on a number of high-end coaching clients, which took some of the spots that's needed for the one-on-one. So this is good. This offer is only good to 3 p.m. We've reset the timer on the page. Remember, the risk is all mine. Here's the link. So write this link down: simpletradingplans.com/Anna. If you just go to simpletradingplans.com, it's going to be $797. /Anna is going to get you the $300 off and the payment plan for the smaller accounts. Those people that are cautious. Here's what it's going to look like. Again, it's going to say expires at 3 o'clock, but this is the page that you'll come to when you go to that link. Okay, and that's me on stage with. I just got off my chair, but this is the page that you'll come to. And here again is my personal guarantee. Okay, if after using this simple trading plan up to 60 days, you don't think it's worth 5 times what you pay, I'll refund the money. It's as simple as that. I'll be waiting in the chat area after this until 3 o'clock. I will be here. Any questions, just after, and I will answer the chat for you. I've got a number of different testimonials here, completed trades earlier. I'm out of time here. I just want to make sure that you're, Virginia, she's a registered nurse. The reason I'm writing you is to let you know what you've taught me has transformed my life. The passion to teach has not only greatly improved my trading, but significantly led to greater self-improvement. She's terrific, registered nurse. You don't have to be a professional trader to use a simple trading plan. Here again is the link, simpletradingplans.com/Anna.
All right, very good. So again, my name is Jason Love. I'm with the Oil Trading Group, and I'm going to talk to you today, a little bit different change here. I'm going to talk to you today about our market maker levels. Very interesting to follow in right behind Norman's presentation here. You're going to see some similarities in some of the things that we talk about in terms of reward to risk ratio and some things of that nature. But I will go through now. I'm going to talk about these market maker levels, and you know, the tagline underneath is the secret trading levels of a veteran floor trader. And I really don't like those kinds of that kind of gimmicky marketing stuff, right? Those kind of gimmicky marketing phrases and stuff like that. But it is appropriate here, and we'll talk about that as we go through it. It's an appropriate phrase here today because the guy that taught me these levels was a veteran floor trader. And as I warmed up to him over the course of time, um, we had this kind of running joke when we would trade together on screen. And it was, well, what are your secret levels? Because he didn't want to tell me how they were put together until, eventually he did. But at that time, he wasn't really telling me where these levels were derived from. And I would always say, where are the secret levels today? And so that kind of became our running joke. And at the end of the day, that's why you see that tagline here. So let's go ahead and get started here today. So again, my name is Jason Love, and by way of quick introduction anyway, my name is Jason Love. I'm the founder and lead trader here at the Oil Trading Group, and that's a picture of me graduating from high school way back in 1987 in Odessa, Texas. Now, you may see there from the hair that you might think we had a hockey team, right? But we did not have a hockey team. That was just a good old-fashioned mullet from back in 1987. Right after I graduated high school, I joined the Navy, and that's a picture of me graduating from boot camp. While I was in the Navy, I was a combat veteran of Operation Desert Storm, and I held a top secret security clearance. And then a quick, short 30 years later, that's me, founder here, lead trader at the Oil Trading Group. We just celebrated back in October of 2010. Back in this last October, we were founded in October of 2010. This last October, we celebrated our 10-year anniversary in the day trading education space. And again, for those of you that have been in this space for a while, you know that that's an accomplishment in this environment. All right, so before we get started, I'm going to show you some numbers and things like that. And I want to go through the quick disclaimer here with you. Obviously, the CFTC wants you to know that options and futures tradings have large potential rewards, but also offer large potential risk. You must be aware of the risk and be willing to accept them in order to invest in futures and option markets. You should seek appropriate advice from your broker or licensed investment advisor before taking any action. The Oil Trading Group, that is us, does not hold itself out as a CTA, commodity trading advisor. So given this representation, all information and material provided by OTG is for educational purposes only and should not be considered specific investment advice. And then, of course, there is the CFTC rule on hypothetical or simulated performance. And if you go to oiltradinggroup.com and click on the government required disclaimers, you can get a full copy of those disclaimers. All right, so let's talk about the big question that everybody wants to know when they come into an environment like this. That's great, Jason, what you're going to show me today. And, I've seen these a lot. Does it actually work, right? And do you actually make it work? And so what I'm going to try to do in these first few slides is to show you the steps that we've taken to kind of show you how and why what I'm going to show you today actually works. So what you're looking at here is a screenshot from our website. Back in 2018, Top Step Trader funded 1,020 traders. Our lead trader, that's me, by the way, completed the process in the fastest time allowed. So what you're looking at there on the left is a screenshot from the older Top Step Trader website. They've since revamped it, but that was a screenshot from the website that said the number of days to complete, the fastest number of days to complete a trading combine was 15 days. And what you're looking there to the right is a webinar that I completed that showed how I passed the Top Step Trader $50,000 trading combine in 15 trading days, right? And the 3 strategies that I followed, and I did that in a live trade room environment in front of a live trading audience. Now, that's not the only Top Step Trader trading combine that I've done, and one of the reasons why we do Top Step Trader combines in our trade room is to be able to help people who are underfunded, right? So one of the ways that we position ourselves in the marketplace is we are kind of like an SAT or ACT prep course. I've got a son that is a junior in college, and as he was getting ready to go into the college entrance process, he had to take an SAT or an ACT in order to gain admission. And so one of the things that he had to do here, hang on a second. Sorry about that, sneeze. One of the things that he had to do was take a preparatory class, or one of the things that we did is to take a preparatory class so that he could score the highest marks possible. And so that's one of the things that one of the ways that we position ourselves in the marketplace is that we want to help traders earn a funded trading account so that they can have an opportunity to be successful with a fully funded type account. Anyway, with that being said, we do a lot of these Top Step Trader training combines in our trading room. And so what you see here are a number of these trading combines that we have done in the past. And again, this is not an all-inclusive list. This is just a sample of some of the trading combines that we have completed. But what I really want you to know here or look at here is this average winning trade, right? So if you add all these up together, our average winning trade is $421 and our average losing trade is $119. So 421 divided by 119, that's 3.5 to 1 reward to risk ratio. So if you were just here for Norman's presentation a moment ago, he was talking about a reward to risk ratio of 2 to 1, et cetera. And this lines up exactly with what I also believe to be the right equation, is a high reward to risk ratio. Now, if you also look at the average win duration, we're about 20 minutes in winning trades and we're about 5 minutes in losing trades. So on average, we're about a 4 to 1 holding on to our winners versus our losers. So in other words, when the market's going in our favor, we try to ride it as long as we can. And when the market's not going in our favor, we try to get out as quickly as possible. Now, that's always easy to say in theory, but how do you actually get there in practice becomes where the challenge comes in sometimes, right? And so I'm going to show you how we use our levels today in order to get to some of these results. And so what I'm going to also do here is let me just click, let me click that link here. I'm going to put this link into the main chat window here for everyone. And that link will be you'll be able to see, you know, I did that to organizers only. So let me get this to all folks. Hang on a second. So what that's going to allow you to do is go back there and you can see some examples of what we did in previous trading combines, and you can see the analysis of the different things. And I kind of write a little post about what happened on a particular trading combine, et cetera, et cetera. So if you're interested in that, you can take a look at that link and you'll be able to find some information on those previous combines. Okay. So again, as we talk about, does this actually work? There's some evidence there that we were able to successfully pass some of those trading combines. Now, in October of 2020, we went through another process here of a trading combine. And this says, congratulations on reaching the funded level. This is the automated letter that comes out when you do pass one of those trading combines. They send out this letter, and here's that letter here for us dated back in September of 2020. Here are the statistics, again, with the idea of does what I'm going to show you today work? The profit objective on the 50K step 2 to the funded account combine was you needed a profit objective of $3,000. We achieved $3,185. We had 80% winning days, and we completed that in the minimum amount of time required, which is 10 trading days, right? And so if you look here, your average winning day was 493, your average losing day was 381, and the profit target in that 10 days was $3,185. So that was going from step 2 into the funded account. Now, I'm not going to talk a lot about this here today, but Top Step Trader has a fork in the road once you go into the funded trading account. Now, I'm not going to go through all the details here. You can watch another webinar that I've done in the past that will kind of go through why I think you should do one path over the other. But from a high level perspective, you have the pro account, okay, or you can go directly into their funded account. Now, the pro account is going to allow you to continue to trade in the simulator. It's going to give you, so any positive fills that you get are going to count towards your funded stature. If you don't pass that funded account, you get to go back to step 2 versus having to start all over again from step 1. And there's a number of different other benefits of doing this. But the bottom line is, once you hit a $5,000 profit objective in that pro account, then they take that $5,000 in simulated profit and fund a permanent funded account for you with that amount of money, okay? And that's one of the bonuses, or it's really a very cool thing that they're doing for you there, that you can continue to trade in the simulator, take some of that mental pressure off of you, and also they will put real live money into that funded account once you make $5,000. Or if you make that $5,000 in the simulator and you say, I can't trade anymore, then you can request a withdrawal and you would receive the full $5,000 amount here. So this is what it looked like when we took the premium, or sorry, we took that pro account, the $50,000 pro account, and went into the premium funded account, right? We made $5,000, $5,084 in 4 trading days, right? So $5,084 in 4 trading days and a winning day percentage of 75%, right? So this again is using our levels. We were able to then go from the pro account, the step 2 to the pro account to the actual $5,000 premium funded account for Top Step Trader. And so here's that letter saying, hey, congratulations, you earned the premium funded account. We're thrilled that you've reached this significant milestone in your trading journey, and we will transfer your pro account balance to the premium account, $5,000, right? So that, again, I'm showing you this to say, okay, that's great, Jason, but does what you're showing me actually work, right? And this is a way for me to do that. Now, also in parallel with that, we also did a $150,000 Top Step Trader Step 1 account. So I was running these paths parallel in our trade room. And so the objective here would be $9,000, right? In this was step 1. You have 5 days to make $9,000. Well, in this instance, you see we had 5 days completed. We had a high balance here of $163,274. Well, that was a $13,000 gain using these levels in 5 trading days. All right, so that was from the 150K step 1 account. Now here is the step 2 account to that funded account. Same idea. You had 10 days to complete this time. The high water mark was $162,358. That's a profit of $12,359. And again, you could look here, you had to reach the $9,000 level, which we clearly did. You had all the other check marks in line, and we completed this in 10 trading days, right? So 5 days for step 1, 10 days for step 2. And so for a grand total of $36,902, we took through 2 Top Step Trader accounts to funded status in just over 1 calendar month using the levels that I'm about to show you here today. All right, so here's another interesting customer of ours. He also went through, so it's not just me that was able to do this, right? Let's see if I can zoom in on this. I may not. Yeah, here we'll try this. Okay. All right. So I got this email on November 18th from Stephen G. He says, by the way, I passed the first step in phase 1 with Top Step with your trading methodology during my free trial over the past 4 days. If that wasn't worth every penny, I don't know what is. And he had a profit objective of $6,000 here. And you can see that he made $6,196 over the time that he spent in the 4 days with us during our free trial. So it's cool that not only can I make it work, but someone who was in our free day trial also made it work. Now, Top Step Trader is not the only game in town. There's also another company out there called Earn to Trade. They approached me and said, hey, we would love to pitch our product to your folks. And I said, hey, no problem, but I got to make sure that I can pass it. I need to go through the qualification steps and to make sure that I could pass the process as well. And they said, sure, no problem. And I said, I need to be able to take some money out of this as well. So I want to make sure that you guys pay me. So I went through what they call a trading gauntlet. And we did a webinar in this where we said it was we went from start to a $5,000 deposit, and then my experience with this organization, Earn to Trade. And let's see here, do I have this on the next slide? Yeah, here it is. So this was the bank account where they made that deposit into my into my business checking account of $5,000 right here. It may be a little bit difficult to see. I'm afraid it's that I try to zoom in. There it is, right? So there is your $5,000 deposit from Earn to Trade. going through their process as well. So again, the reason I'm showing you all this is to say to you that these are the levels that I used in my trading on a day in and day out basis to successfully get through these trading combines in front of a live audience, and is my way to show you that, hey, this actually does work. These levels do work. Now, you may say to yourself, well, geez, Jason, that's cherry picked October, November, and that's really all that you got. I have a YouTube channel that I'm going to throw the link in here for you as well. This YouTube channel has nearly 500 videos on this channel, right? And you can scroll through here, and these are all videos of me taking trades in the day trading chat room that are giving you, here's a 4-to-1 reward to risk ratio. Here's a trade down here that's a 138 tick CL trade that was probably 10-to-1 reward to risk. Here's some recent trades. This is a 6.7-to-1 reward to risk. Here's 4.1. Anyway, the point of that is these are just basically an endless supply of you to be able to see that those kind of reward to risk ratios using these levels are something that can be obtained. And so I just threw the link to the YouTube channel into the window there for you as well. All right, enough of that. Let's talk about what a market maker really was. So every instrument, of course, needs a market of buyers and sellers in order to move on the exchanges. Market makers were high volume traders that literally made a market by always standing at the ready to buy and sell. They would profit on the bid-ask spread, and they benefited the market by adding liquidity to the marketplace. Now, that's a picture of Patrick, who was the floor trader that taught me how to draw these levels, and he is in a very charismatic pose there. But that is Patrick, who taught me how to do these. He taught me how to draw the levels and how to trade these levels. And again, he was considered as a floor trader, considered a market maker. Again, floor traders fulfilled an important role in commodity and stock markets by providing liquidity and narrowing the bid-ask spread. Again, floor traders were also referred to as market makers. Now, these levels that I'm going to show you today were developed in the 1980s, right? Again, by my mentor floor trader, Patrick. In their original form, these levels were calculated by hand. And in fact, if you were to come on board with this, I would actually show you how to draw these levels by hand as well. You'll remember going back into grade school that you would go through, and before they would actually allow you to use a calculator, they made you do the math by hand, right? You had to do the long math by hand. Then they would give you a calculator. And that's the same thing that we do. We have an indicator that will plot these on NinjaTrader 8 and Sierra charts, but at first I'm going to teach you how to draw them because I think it's important for you to understand the whys behind the what. So despite the changes in the way that trading is conducted today electronically, the logic for the levels continue to work in today's trading environment. So what are the market maker levels? Well, as you know, the market is continuously telling a story. The story provides the context for the daily trading session. So when you sit down in the day and you begin to do your analysis, most people will tell you, you start with the top-down kind of approach. What is the higher time frame telling you? And then you drill down into the lower time frames to kind of develop the narrative or the story on a particular trading day. The market maker levels are the structure points inside that daily story. And once determined, these structure points are used as tactical areas to make trading decisions, entries, stops, and target locations. So why the market maker levels work? Well, as we know, the markets do not move linearly in nature. The market rallies and pulls back, and then it will pull back and rally. And statistics will show you that the market will be non-trending greater than 80% of the time. And so if you just take a profile chart here and you start at the left, the market started at the top and then sold off. And then it rallied and then it sold off. And then it rallied and it sold off. And then it rallied and it sold off. And that auction process, right, as Jim Dalton would say, that continuous two-way auction process is continuous all of the time. The reason why these levels work, well, I'll tell you here in just a second. So in order to fully understand why the market rotates, you must understand that the auction process and how markets go, you must understand the auction process and how the markets go about determining what the fair prices are in any given day. Remember this, the market moves from horizontal development to vertical development to horizontal development, and so on, right? So it will trend, it will go, it will rotate, it will trend, it will rotate. That's the process that the market goes through continuously. The sole purpose of the market is price discovery. The market will rotate within a range of prices until a variable changes. So I use this as an example, but let's say that you are trying to sell your home. The home has a value as evidenced by other properties that have sold around it. So there's going to be an upper end of the value area and a lower end of the value area, right? But once something changes in the market, let's say they find an oil deposit, or they develop some new technology that can extract oil now from an otherwise unextractable source, well, all of a sudden the property values in that neighborhood are going to continuously rise until they say, look, I'm not going to buy this anymore, and people start to say, well, okay, the buying is over now, let's try to get out of our position. And the market will do the same thing on the downside. Sellers will sell the market until the buyers go, okay, there's enough value here now for me to buy. And that's a continuous process that goes on. And it is only when a variable changes that that value area then changes as well, okay? This is why those levels work. The market rallies and pulls back. It pulls back and rallies. These rotations create a set of measurements that are based upon time and price cycles from those previous trading sessions. So what you see here to the right is an example of those levels. And I'm going to show you some chart examples from today's trading session. I'm not going to just cherry pick a few examples for you. We're going to talk about chart examples from today's trading session as it was happening in real time. Also, these measurements are then projected forward and become the structure points, as we just talked about, for the day's trading session. Now, I get asked this all the time, Jason, were created by a floor trader. Are they floor trader pivots? And the answer is no, they're not floor trader pivots. And here's the difference. On the left-hand side of your screen here, there's the calculations for floor trader pivots, right? A simple calculation, the kind of the pivot point or that center line is the high plus the low plus the close divided by 3. That becomes your pivot point or center point on the day. Then you have resistance 1 and support 1 above and below that. And that is the calculations of which can be seen here. And then you have resistance 2 and 3 and support 2 and 3. And they are just variations on that same formula. These measurements are basic in nature and do not take into consideration changes in market and price volatility or range expansion as it's occurring in real time. So in other words, once these levels are set, they are set for the day, right? There is no changing these levels regardless of what else is going on. With our market maker levels, these calculations are based upon measurements which derive from time and price movement, right? And because of the time calculation involved, these levels evolve in real time to account for the changes in price rotations and price discovery. And again, there are 3 measurements to this. There's the extended trading hours or your overnight session. There are the RTH or regular trading hours, and then there are the intraday trading session levels. All right, so my final thoughts here before we move on to some chart examples. These levels will continue to work because trading is based upon human emotion and groupthink. These levels take advantage of the process of continuous price discovery and provide structure for the daily trading sessions. All right, so again, I'm going to go through some chart examples here. We're going to talk about the extended trading hour or the ETH session levels. These levels begin plotting at the close of what used to be the pit session or the RTH session and are valid until the close of the next day's pit session. They provide structure points for the overnight trading session. Then we're going to talk about the RTH session levels, that is the day levels. These levels begin plotting at the open of the RTH session and conclude at the close of the RTH session. If you're not familiar with RTH, that was the regular trading hours or what used to be known as the daytime session. All right. So what you probably all have been waiting for is let's take a look here at the levels here in action. All right, so let's bring a chart out here. All right, so here is a chart of the ES today. Now, what you see in the second panel is simply a cumulative delta, right? So this is measuring aggressive buyers and sellers that are coming in, and they're not part of this market maker level program, but it is something that I like to keep on my charts to watch. Okay. So we're going to start here in the overnight session, and I'm going to turn on the overnight structure points. All right, so there are the overnight structure points here. So here is the RTH session close, and right at the close, the overnight levels form up and are valid through the balance of the trading day. Now, what I'm going to show you here is not the way that I recommend trading it, okay? But I am still going to show it to you so that you can just get a sense of what the levels look like. So I'm going to turn on what we call a zone of influence. So each market has what we call a zone of influence. And a zone of influence is simply a support resistance level, is not about to the tick precision, but more about the zone of influence that is around a particular market. Okay. And so I'm going to do this here. I'm just going to take every one of these as they touch one of these areas. Okay. And so if you said, look, this is the zone of influence here, I'm going to get short at the zone of influence right here at 1875, and I'm going to write it down to the next level. That was 20, let's see, that is 31.25 points. Your stop would be above this level, which again, this is at about 2.5 points. So let's bring it down actually to the bottom of the zone here, right? There's the bottom of that zone right there. Let's do this here. Bring this down to the bottom of the zone. That actually makes that target 30, yeah, about 31 and a half, 31.25 points, right? And so if you said your stop is going to be above the actual level itself, that's 2.5. This should be about 3 points, right? That's I got that too high. Let's see here. All right, so that would be just above that level at 3.5 points. 3 points rather. Sorry, 3 points right there. So this is a 2.5 point zone. You'd put it right above that level at about 3 points, right? There is a 3 point risk. Here's a 28 point target. That is a 6, 7, 8, almost 9 to 1, just a little over 9 to 1 reward to risk. And so you said, okay, I'm going to get in here at the level, and I'm going to put my stop below that zone. And again, this is I'm having a little bit of trouble because the chart's squeezed in here. It would be a 3 point stop right here, okay? And there's a 3 point stop. So you had a 28 point winner, you had a 3 point stop. Now you said the bar gets over the top, closes above, and so I'm going to now take this trade off of this level here, right? This bar opens right here. You got to take the trade off of this level, and the market rallies all the way to here. That's 29, almost 30 points. Doesn't quite make it to your level, and you have this ledge here, right? That you said, okay, if it drops below that ledge, then I'm going to get out, and it does here and closes. That's 17 points, right? Couldn't quite make it to the level above. That's 17 points on a 3 point stop. That's a 5 to 1 reward to risk ratio. And you said, okay, I'm going to do it again. We come down here. The market then rallies. There was a 3 point stop. The market rallies 32 points, and you get the gist, right? So it comes here, and you take your 3 point stop in this area here, right? You take your 3 point stop here, right there, and the market breaks and closes below, and you said, look, I'm going to take the close below this, right? So that is, this is, let's see, 09.25, right? And you took a stop there, okay? So you took another stop there, right? Market comes down into the level, no heat at all, comes back up, and there's a 34 point move between that area there, right? And so you've taken a couple of stops at 3 points, and you've had 35 point move, 32 point move, 17 point move, 28 point move on, and that's taking every single time it touches one of these levels, right? Which I'm not recommending that you do, but I'm just showing you how that opportunity would work, right? And this is today on the ES, right? We're not doing anything. We're not cherry picking. We're just going through as they've happened here today on the ES, right? And that's exactly what you could have looked at. Now you see the market has rallied back up to the high, came back into the ETH session level, and then rolled over. Now let's say you don't trade the overnight and you wanted to trade just the day levels here, right? You want to trade just the day levels. Market opens up, comes up into the RTH target up here. And let's say you did get short right here at the open, right? Let's say you did get short right here at the open. You would have taken just a quick stop, or sorry, you got, yeah. Let's say this opens here, you took the short here, and you would have taken a 3-point stop, right? So bummer, we got here, you would have taken just above right here, which would have been, again, this is a 3-point stop. That's the stops that I like to use here. That's a 3-point stop. Market rallies right up into the target level. You said, I am going to take this. And man, look at that bar, just blew right through it. Well, let's take our profit at the next level down here at the RTH mid. That's a 36-point ES move. 36-point ES move at that RTH target. Market comes back up, closes above, comes back, rallies, sells off back into that level again, and off we go to repeat the process for 36 points on the ES move. Now, you may have only taken it here when it got to the pullback. That's 18 points. But again, your stop would have been 3 points. And that's in today's markets as we sit here looking at this today. I will get to the questions here in just a moment. So that's what it looks like on the ES. Here's what the NQ looked like today, right? So these are your overnight structure points. So again, market opens up underneath the RTH, the ETH signal, rotates down into the level below it, and you ride that up into that zone of influence up here. That's 200 NQ points, right? That's 200 NQ points. And let's say you had this structure point here, and you were going to, on the break of that structure there, you were just going to take it out. At that point, well, that's still 158 NQ points. Market comes down, rallies back into the zone of influence here at the high, comes right back down again into that ETH area here, and you get to take that same ride. All this time, it's more of the non-stop version, which is again 209 points, all the way back up to that level. Let's say you got short here. I take a 15-point NQ stop, which again, this is, let's just pull this out here, right? That's 31, so that would have definitely stopped. I'd generally take a 15-point. I'm a 15-point one lot trader on the NQ just because of the hairy nature of it. And let's say that you don't get in here, that you waited down here, right? Well, again, that's 200 points. 15, you had a opportunity for 158 NQ points, 209 NQ points, and a 15-point NQ stop, right? Perfect, right? Those are perfect reward to risk scenarios. Again, let's go through here and we'll go into the drawing tools one more time. We'll take these off. And now we're going to look at the day levels as they formed up here today. Well, market opens up again right up here, slams right into the underside of the RTH target, and it is an aggressive move, right? Blew through this bar, blew through the signal, the mid, and all the way down into this signal bar down below, which was 235, almost 236 NQ points with no heat against the level up here. And then you said you want to do it again. Well, let's see how far this low push here was. I think that was pretty far, 23 points. So let's say you wanted to get long here. You take this stop, market pulls up, closes above that level, and you said on the open of that bar, I'm going to get in. And you had the opportunity to ride it all the way up to the RTH target for 190 points. So you would have had a 15-point stop here, right? You had a winner here for, what is this winner? This winner here was, let's move, see if I can move that. And we'll pull this back here and we'll do this. That was a winning opportunity there for 240 points, a 15-point stop, and then you had an opportunity for 190 points. Remember what I was showing you earlier in those trading combines that I have done over the years. My reward to risk ratio averages 3.5 to 1 reward to risk. Well, you could clearly see how it is that I could come up with 3.5 to 1 reward to risk ratios. We could take a look back at the NQ yesterday, right? So if you were long here at this level, this would have given you an opportunity to get safe, if you will, right? The market opens up above that level. There was 65 NQ points before it pulled back, right? That was 65 NQ points. Comes back. Let's say you tried to hold on for the level. Comes back, takes you out at even, and then you get back in at the RTH signal here, right? And the market sells off all the way to this low, which was 164 points. And let's say you took the pullback to here on that level, right? That's 98 points. Market comes back up, pops down here. You got long. There's an opportunity for points here. 78 points. Market drops down through the level, comes back up into the RTH signal, and then goes down to the low of the day for 217 points on the NQ. So you can see here the structure that is being provided is just excellent on these levels, allowing you for low risk opportunities and high reward trades. When you look at these as steps on a ladder, the market will move from step to step to step. All right, we're going to take a look here one more time. I'm going to run out of time here in just a minute. Let's take a look here today at the CL. So here you are again. These are your market maker levels, right? So the market opens up at top of this RTH signal, right? And so right here, let's say you got in short here, and I take it at 48. I would have had an 11 tick stop. 12 ticks right there at the top of that box, takes you out, comes back down, closes underneath, and then tags back into that level for the short, and that gives you an opportunity for 76 ticks. 12 tick stop, 76 worth of opportunity down into this level here, right? So if you don't take all 76 ticks, you can still get a 3, 2-to-1, 3-to-1, 4-to-1 reward to risk at 24, 36, 48, or 50, 60 ticks, right, on this push down. Now this level doesn't come all the way down to the level. So let's say you missed it there, right? And so again, let's say you took this opportunity here to try to get short again, and that is 47 to 57 right here. Okay, so you would have stopped right here on this pullback, and maybe you said, look, it couldn't get through that level, so I'm going to do the open of the next bar, right? So the open of the next bar, you get long. And again, I'm not recommending you trade like this. I'm just showing you what you could do, right, with these levels, right? So again, you get in here, there's an opportunity to the next level above at 71 ticks. There would be an opportunity here to go to the level above that for 71 plus, well, a total of 160, right? And the market just is following these levels just like stairs on a ladder. And so here it is yesterday. I don't trade before the inventory number, but look at this. You get that explosive inventory number on the CL, right? You get that explosive inventory number on the CL. Market comes right down to the market maker level here, zone of influence, and then rallies all the way into the next set of levels above. And I'm telling you, the markets are like this every single day. Here's what gold looks like today. So we're going to turn off the day levels and turn on the overnight levels. And look, right, the overnight structure rotated between these two levels here, the mid and the signal, and there was just opportunity to play these levels all day long. Once the market opened and you got into the daytime levels, you rotated around the midpoint, market sells off. You might have been chopped up here, right, if you're taking every single time it touches. But then when you come up into this RTH signal up here, and I don't trade gold, but you had an opportunity for this move so far from that level. That's 13.9 units of measurement. I don't trade gold. For you gold traders, you'll know what that means. All right, so I got about 4 minutes here. Hopefully that makes sense. What I'm going to offer you today is nothing. No, I'm kidding. I'm going to offer you to come in and take a free trial. So I am not looking, I'm not trying to sell you anything in here today. I want you to come in and take a 3-day trial in our day trading chat room. The link to which I'm going to put here in the box. Come in, watch us trade these levels on an everyday basis, right? Come in, sit in, watch over our shoulders. We trade these levels on a day in and day out basis. So with all of that being said, are there any questions here? As I've got about 2.5 minutes left here. Do you guys have any questions? Okay, Daniel, what is the charge after the 3-day free trial? Well, we have a we offer a lifetime package. No, if you make a one-time payment, it's $9.97 lifetime package. There are no additional charges. There's no additional room fees. That gives you lifetime access to the trade room and all of the training, where I'm going to show you, not only am I going to give you an indicator, but I'm going to show you exactly how to draw these levels yourself. And so as Ninja Trader, let's say Ninja Trader, I'm 52 years old, by the way, in about 2 weeks. And so as the clock turns on me to be 52, maybe I don't want to trade anymore in 15 years from now, but you're 30 and you plan on trading at 45. Well, I'm going to teach you how to draw these levels so you know how to put them on whatever chart you trade with and whatever platform you trade with. So again, that's part of the training. I'm going to teach you how to trade them. I'm going to give you some trading techniques to use around them, setups. I'm going to give you our version of market profile trading so you can kind of understand what the story the market's trying to tell on a day in and day out basis. But these levels are the backbone of our tactics that we trade with in the trade room. So thanks, Daniel, for being here today and asking that question. Anybody else have any questions while we wind this up here? Yeah, that's right. There are no additional fees once you become a lifetime member of what we do here. How often do I do the trading combine? I do it quite a bit. Because, again, we get new members and all of the time. And again, one of the things that I've learned about doing this for 10 plus years is that traders are typically not funded properly, right? And this is an avenue that is quite honestly, it's an avenue for traders to go and get funded. But if you can trade your personal account under the same parameters that you're trading one of these trading combines, then you're going to be successful there as well, right? That you'll be successful there as well, because these trading combines really are good money measurement kind of tactics, right? These are definitely money management kind of tactics that you want to be able to use in all of your trading anyway. So, all right, I've got less than 1 minute here and before my time is up. I'm going to take that 1 minute to say thank you very much for joining us here today. I certainly appreciate all of the questions. These things will be, I know Anna records this. She'll send out a recording. I've done this enough times to know that she'll send out a recording of this presentation. And if there are any questions that didn't get answered, we'll figure out how to get you an answer.
Okay, so what we're going to do is a live market analysis using price alone. Okay, no indicators needed. And I'm going to teach you something, and I'm going to share with you exactly what that is right now. So I'm going to teach you why, we're going to ask the question, why am I always wrong? Why does it appear sometimes when you're trading that as soon as you get into the trade, it goes against you? And then I'm going to introduce you to some professional chart reading, and this you won't find in any book. And then we're going to go over a little bit about supply and demand, and then we're going to jump into the live markets, and we'll look at primarily Forex futures. We'll look at Bitcoin and maybe some commodity futures and maybe some stocks if we have time. I'll make an offer to you at the end of if you want to take the next step, and we'll open up to audience questions and answers, time permitting. So here's a picture of me giving a similar presentation at the New York Traders Expo. And more recently, last month, I was invited to speak to the Bogu International Forum in China, and it was actually took place online. So they invited me, and would have gone in person had it not been the current situation we're in with this pandemic. But it was a very good forum online. Quick disclaimer before we begin, you can read that. Just know that all comments here are for educational purposes only. And for those of you who are new here, a little bit about me, you can read that. Just to let you know about TradeSmart, we're a trading education business that focuses on teaching you how to read the market professionally and how to run a successful trading business, including how to develop your own trading plan and strategies which fit your personality and lifestyle. So let's jump right in. Why am I always wrong? So this is what the market looks like sometimes. And this was me and probably you as well at the beginning of your trading career, or maybe now you may be able to relate. So the market's going up, you may learn about uptrend, maybe using moving averages, and you look and you see that price is moving above the moving averages, so it's in an uptrend if you define it that way. And we take our first trade over here. And then what happens is the market goes in your favor a bit, and you're thinking, great, this is working nicely. And then all of a sudden it turns to the downside and you think, oh no, it's going against me. You look at it, you look at the P&L on your screen and you see it going bigger and bigger in red until you can't take it anymore. And then you close the trade down, take your first losing trade. And then what you want to do is you want to make your money back. The market just took that money from you. That's what you're thinking, which you shouldn't be thinking, but that's what most people think. And what you do is double up on the short side and try and make that money back. Market moves in your favor, you make it a little bit, and all of a sudden it turns to the upside and you take your second losing trade. So you lost maybe $1,000 on the first one, you've lost $2,000 on the second one, around about. It's your $10,000 account and you're risking way too much and you're down already $3,000 and you're thinking, I want to make that money back. If you can relate to that, just type a yes in the chat area. Let's see if I can actually see the chats. That was you at some point in time, or if you can relate to that now, then just type yes. Now you want to really make that money back. You think, okay, you're down 30% in your account. And so you take your third trade and you think, okay, I've got the direction wrong again. I need to make that money back. So you buy, it's on the wrong side, I sold. So I bought, it goes in my favor a little bit. And then the market turns to the downside again and you take your third losing trade. And now you're thinking, oh dear, I'm doing this wrong. I'm trading the trend, using moving averages, and it doesn't seem to be working. And then you thought, okay, I learned about something called support and resistance. And you join the peaks and join the troughs, and this is resistance and this is support. So when the market comes down here, instead of selling, I should be buying. And the market comes up here, I should be selling, not buying. So I'm going to do this. I've got this, I've got this backwards. So the market comes up here and says, oh, this is a resistance area. I'm going to sell. So you take your fourth trade over here and lo and behold, the market continues moving to the upside and you take your fourth losing trade. At this point, your account's probably down something like $8,000. You're down 80% in your account and you're not feeling good about yourself. What are you going to tell your spouse? You thought that you could maybe give up your day job, have more freedom and everything that trading promises that you could be able to do, but that doesn't seem to be the reality for you. You throw your hands up in the air and you're very frustrated and you're like, what am I going to do? So if that was you, again, just say yes and we can move forward. Now, just to tell you a story, at the beginning of my trading career, the first trading floor, well, actually, there was a second trading floor I worked on. And the second trading floor, or the first trading floor I worked on as a trader, I used to be the counter indicator. I used to call out stocks. My first trading account was $500,000 of trading. That's what I was allocated. And after passing my Series 7 exam, that's the amount of money that was allocated. And then as you progressed, you got given more capital. So I used to call out a trade, and there were two people on the trading floor within the first half an hour to an hour every single day. Used to be up somewhere between $2,000 to $5,000 to $10,000, like clockwork. So I used to call out a stock, and I used to walk by and just look over their shoulders and see what they were doing. And if I would call a long, for example, they would be on the short side of it. I was the counter indicator because, as you know, most beginning traders usually do the wrong thing. They buy when they should be selling and sell when you should be buying. If it was only as easy as just, taking a novice trader and asking them, what shall we do? Buy, and then just do the opposite all the time, then you'd probably do quite okay. So what you really need to learn about is something called supply and demand. And again, that's not the same as support and resistance. Supply and demand is the reasoning behind it's really what's going on with the orders, with unfilled orders, as opposed to some abstract concept of highs and lows, support and resistance. So let's go on to professional chart reading now. In order to read any market, as I said at the beginning, you only need to understand how to learn price. Most indicators are built on price. So this is a chart over here, a Japanese candlestick. It's plain vanilla Japanese candlesticks, open, low, high, and close, and we'll go into that shortly. You only need to know really three things. You need to understand pivot analysis. That's our way of reading the trend, and I'm going to share with you how you can actually do that training towards the end. And this is, again, using price alone, using the candlestick charts. You don't need any indicators. Okay, there's no moving averages necessary. And then supply and demand analysis. So you need to know where these levels are. supply and demand. I'm going to show you the charts from today and actually what's happening right now in the market. And then something called price direction analysis. You need to understand what direction is price currently moving in. Is it moving up or down? Much like if you go to a lift and the arrow is pointing up and you want to go down, that's probably not the right timing. I mean, it may go down eventually, but you're going to go up first. And that could be the same as when you get into a trade on the short side and the market moves up first and then it goes down. You want to time your entries so that when you get in, it goes almost immediately in your favor. That would be the best. Wouldn't you agree? So price direction analysis is something where we can actually analyze on any time frame what direction price is currently moving in. And again, there's only two directions, up or down. And we do this on multiple time frame analysis. We have to make sure, for example, if you're in an uptrend on the hourly chart, that uptrend is not reaching an area of supply on a larger time frame. So you need to have situational awareness or understand the context in which you're trading in. So not always you want to buy in an uptrend. Sometimes the trend will come to an end, and that usually happens in areas of supply and demand. So I believe that, you go to the quote at the bottom, the charts will teach you all you know once you have a framework for reading them. Instead of becoming a strategy-based trader, why not become a market-based trader? As in, read the market and then adjust the way you trade depending on market conditions. Yeah, it's much like learning music, for example. If you just learn a strategy or you just learn to play one song on the piano, you're very limited. You can play one song, and that might not be the right song to play in all circumstances, for example. If you understand how to read music and you can play piano, then you can play whatever songs you like, depending on what mood you're in or what the environment is, or what you feel like doing, for example. So the idea is understand how to read the market and then develop for yourself your own strategies based on an understanding of how price moves on price action. And these are the three things you need. And I'm going to show you some charts very soon, and we're going to go through these three forms of analysis without going into the finer details. And you'll see how you can use them to make high probability trading decisions on what's likely to happen in the market, depending on what's happening right now. So let's go back to basics, okay? We have two bars over here, and generally this is a hammer shooting star. Now, most people learn this as a bullish bar, and this is a bearish bar. Just type a yes in the room if you believe that this candlestick over here, the shooting star, is a bearish candlestick. Just type yes. Let me see if I can see. I don't think I can. Let me have a look. Yes, I can. I can see that. Good job. Okay, so I see lots of yeses coming in. Yeah, most people are taught that this is a bearish candlestick. But guess what? Well, let's just wait a couple of minutes and I'm going to share with you something over here. Okay, so here we have that such candlestick. Is this bullish or bearish? Most people think bearish, correct? We've got 1, 2, 3, 4, 5, 6 bars to the upside. Now, remember what I said. Once you've got a framework for reading the market, then you can understand, using that framework, every single market. 3 things, that's all you need. Nothing else. No complicated indicators, no relying on someone else's signal service, taking it into your own hands and understanding exactly why you're doing what you're doing. Not just taking the green line cross the red line, it's a buy, the red line cross the green line, it's a sell, and every time this goes like this, you do this without having a clue why you're doing it. Again, I believe, that's kind of nerve-wracking because you don't understand why you're doing what you're doing. Whereas imagine trading when you can actually understand why you're doing what you're doing and keep your finger on the pulse of the market at every moment in time so you know when something changes. Now, what I'm sharing with you now has taken me over 15 years, probably over 16 years to learn. And at least 5 years of hard work to really get to the basics of what I'm sharing with you. So this is based on many years of experience and probably 5 years of failing at this at the beginning, until I finally understood how to keep it simple, but it's a powerful simplicity. Remember, a lot of things in life, we try and make things complicated. Whereas if we look for the simple truth of things, that's where the magic happens. So keep things simple. If you think about what markets do, they can only go up and down in price. That's it. It's up or down. And sideways is a little up, little down, little up, little down. But generally, they're either going up or down. How complicated is that? Price moves up or down. So let's have thousands of indicators showing all different sorts of things about what's happening with price, when ultimately what it's doing is just moving up and down. The key is to understand where to get in and where to get out, understand what the direction of the market is, and understand timing. If you understand direction, then you know which way to go, buy or sell. If you understand timing, then you can time your entry. You also need to understand where markets are likely, where to pick your targets and where to put your stops as well. So those are the three most important prices that you need to understand once you know you want to enter a trade: where you're getting in, where you're getting out if it goes against you, and where you're getting out in profit if it goes in your favor. So again, back to this chart. Is this a bullish or bearish bar? So let's see what happens. The market moves a little bit higher. And, well, this ends up being a bullish bar. The market moves even higher. Now look what happens. When you see this bar, basically this was a trade that we did in the room, in our trading room. And when this happened, I said, we want to be on the buy side, not the sell side. Most people think down. But look what happens with the market. The market teaches you what you need to know once you have a framework in which to read that market. You don't need to rely on anyone else once you understand this framework. You will see for yourself. It works. And it's super simple. Okay, so let's go through this in terms of the three things that I just taught you without going into the greater details. So let's look at the first thing. In terms of trend, what trend are we in at this point here when this bar closes? Well, we've got a higher low and a higher high. So we're moving in the upward direction from a trend perspective. Okay, that's not the complete picture, but so far we've got a confirmation from the trend that we're moving up. So 1 point to the upside. In terms of supply and demand, where are we in terms of supply and demand? Well, this was the supply area, this zone over here, and this bar just went straight through it and came back. So we've just cleared out all those sell orders. So where are the next sell orders? Up here. And that's why when the market came up to this level, the market dropped again. So in terms of supply and demand, we're not in supply, and we've got now demand beneath us. So from a demand and supply perspective, the next supply area is here, so the market's going higher, most likely. Now, from the third perspective, in terms of price direction, our direction changed to the upside over here, and we're pointing to the upside still after this bar closes. So direction is up, trend is up, and we're moving, we've just cleared above supply. So we've got three reasons why you want to be on the buy side, and that's just on this time frame. You can look up to a bigger time frame and see where we are on the bigger time frame supply demand curve, for example. So the question back to this is this a bullish bar or a bearish bar? Well, it depends on the context. In this context, once you have a framework for reading the market, this bar is actually bullish. So if you understand that, then you'll be on the buy side here and not the sell side. How do I know? Well, look what the market did. The market confirms. How do I know that this works? Because I used to be on the sell side here and it didn't work. And then once I had a framework for understanding the market, I put my decision making through that framework and say, well, what does trend tell me? What does supply and demand tell me? And what does price direction tell me? If they all tell me buy and I'm on the sell side, I'm clearly on the wrong side of the market. Why three? Well, if you look at a stool, for example, if you put one leg on a stool, it can wobble over. Put two legs on a stool, it can also wobble over. Put three, that's the first time it gets some form of stability. Let's move on, supply and demand. So let's teach you a little bit about supply and demand. What is supply and demand? So everyone knows prices move higher when there's more demand than supply, and prices move lower when there's more supply than demand. And in equilibrium, when supply and demand are equal, it moves sideways. So what moves markets? Well, you may think it's news, you may think it's geopolitical events going on in the world, it's the pandemic, it's tsunami. I mean, whatever the market's doing, there's always a reason why it's doing it. But basically, the underlying reason why markets move is supply and demand. If the market's closed, for example, and great news comes out, and on a Sunday night, for example, and the market's not open in the US stock market on a Monday morning yet, then the market doesn't move. So the news didn't move the market. Well, it hasn't moved it yet, yeah? As the market opens, it will probably gap up and then maybe sell off the rest of the day. And then again, that's another reason for that. If you come and join the trading room, I'll explain all these concepts as they happen in the market, why the market's doing what it's doing. And over time, you start to build a great understanding of price action and understanding the reasoning in terms of price, nothing else, why the markets move the way they do. So price demand moves the markets, and this will never change. When I first started to trade, it was over 16 years ago, I was taught a specialist way of trading, the New York Stock Exchange specialist. And what we were to do was to spot what the New York Stock Exchange specialist was doing by looking at the time in sales and the prints, the orders going off on the tape. The time in sales gives you the time and the number of contracts, for example, and the price. Remember, every order is a buy and a sell. Yeah. So markets don't move higher because there's more buying going on than selling. Remember, every order is a buy and a sell. So there's an equal number of buying and selling. What people mean prices move up when there's more demand than supply. That means there's more willing buyers at a certain price level than willing sellers. So if every order is filled at a certain price level on the sell side and there's no more supply, then prices will go up so long as there's more demand. And guess what? The system that I was taught to trade no longer worked when the specialist system went hybrid on the New York Stock Exchange. So I spent time learning the system and it didn't stand the test of time. So it was back to the drawing board. So wouldn't it be a good idea to base your way of trading on something that will never change? Learn something, become a master of it over time, and never have to learn anything else. How much time do you have? Do you want to keep jumping around from system to system and these systems don't stand the test of time? Or do you want to learn something that's timeless based on supply and demand, based on principles that will never change, that have been around since the beginning of time and will be around till the end of time? So your job as a trader is to identify supply and demand in the market. So why is that important? Because that's where prices move from and to. So you can see over here, how do you identify demand? Well, these are areas where the price turns and moves to the upside. Now, not every time it turns is a significant area of demand or supply. And where you see prices coming down, that's usually because there's more supply than demand. So we call that a zone. Remember, they're not glass floor and ceilings, they're zones. So your job is to identify high probability turning points in the market, because that's where trends begin and end. So what I'm going to do with you now is to jump into the live market and show you from today, and maybe going back a bit, how supply and demand work in the market, and maybe we'll look at a little bit at trend and price direction in the current market now, and you'll see actually the market's moving quite a lot at the moment, which is kind of interesting. So let's jump into a live market analysis. Just type a yes in the room if you're ready for me to jump in, and if you're watching the replay of this, you don't need to type yes. Just hang on, we're going to jump into the live markets. It won't be live for you right now because you're watching the recording, but those of you who are live, it's live. So let's jump into the markets. So what I want to do is start at the dollar, and you can see the dollar, if we look on the monthly chart here, is in a demand area. It's moving up from demand. Price directions change to the upside, but trend is going down. So we've got two reasons why to be on the buy side and one reason to be on the sell side, and you can see the market's moving up. We just had a nice move up just now. This is demand from today. Now, if we look at the hourly chart here, this is a supply area. You see we hit this area and we came up, and now we cleared above it and then we came back. So we can remove this now. Again, these are dynamic. Yeah, this is demand from today. So when the price came back down just now at the top of the hour here, we had a move up now into this supply area. Now we're in supply, but we're in an upward moving market from today. Yeah, as you can see, and this could end up being the bottom of a monthly base, whereby we may end up moving back up here again. Let's have a look at a few more markets. And you can see on the inverse of that, the euro moving to the downside from, this is supply, we're pointing down, and looks like we just moved to the downside here. Now, let's have a look at gold. And again, you can see gold moving. This is a supply area here. Now, it was a supply area from here. This is supply. Now, for those of you who are not trained, will not see this level as a supply level, but there's a pivot here, and this level, this moved down below a pivot. Hit demand, pushed up into supply. So this is an area where you want to be on the sell side. This is a monthly chart. And again, these are, if we go back in time, these are areas where we were on the buy side longer term. This is a monthly chart, long-term time frame. We were buy side here, we were buy side here at the beginning of last year on the buy side, and you can see we had a big move. And then we hit the highs and came down, and now we're no longer in an uptrend, and we hit supply, so the odds are we're going down. Look what happens. Market turns, comes down and bounces off this area. We go down, make a lower low into demand, and look what happens. We're going down. We're still in demand, but the market's turned to the downside. We're no longer uptrending anymore. So if we take that down to the smaller time frames, you can see what's happening here. You can see when you have moves up, you see the trend here to the downside. We bounce off demand and go lower in downward moving markets. And let's look at oil. It's another one which the odds are, from a supply demand perspective, the market's going to break this level most likely. I can't say for certain, but the odds are we're going to end up here probably this sometime soon. Yeah. Now you might think, hey, this is supply. We had a big drop. This is demand, but not all supply is the same. Okay, this is not a strong area of supply, and the momentum and the movement of the markets to the upside, and the trends now to the upside, not the downside. And we call the bottom over here on the lower time frame on the change of trend, and you can see a pullback here and a move up. And now we're in an area where you don't particularly want to be a seller because the moves from here are not going to be big. I think we're going to end up likely breaking. But let's go down to a smaller time frame. You see, this is demand. What happens when price comes down to demand? We move up and make new highs. You see that? So you can see the trend here, up, up. Every time we go down, we push up higher. We come down, push up higher, come down, push up higher. That's the definition of a trend, of an uptrend. That's not the whole definition. That's just what you want to be seeing happening. So in terms of supply and demand, you can see how the market's moving here. Let's move over to, let's go to the NASDAQ. So the NASDAQ is now, if we look at the weekly chart, we have supply here, we've moved down, and now we're hitting demand. Notice how we didn't stop here. Well, we did get a move up on a smaller time frame, but now we're coming into demand levels here. But we're no longer in an uptrend anymore. And if we look on the daily chart, look what happened here. The trend changed here, and then we broke this level of demand becoming supply, and we've had this move down. So down here, you want to be on the buy side, up to here, and then when you're on here and it doesn't break and it turns, you want to be on the sell side. And notice how we're moving down. We're at the outskirts of a demand area here, which is probably going to break. That means we're likely to go lower. But we could again bounce up just like we did here. We could have another bounce and then turn around and go lower. So you want to understand where these levels are. Look at this level here where you want to be on the sell side, and down here where you want to be on the buy side, and knowing this time round maybe a little move up, but look, we broke it now. Understanding when price is likely going to break that. Again, it's not enough time in this short presentation to go into all the details, but you can come and join us and I'll share with you how to do that. Come and join part of the training of how to read the trends, so you can learn how to do it using price action alone, no indicators needed. And then come in the trading room, and then you'll see how we put this into practice every day and how we understand what's going on in the market. Now, let's go over to the pound because there's a nice big move happening just now. And let's see where that's happening from. Lo and behold, look at this. This is supply. Where did the market move up just now, and where's it coming down from? Supply. Look at this move. It's a big move. 1.4 down to 1.392. So it's almost 100 pips. About 30. Yeah, if you got it from up here, it's almost 100. It's 90 pips or so. Nice big move down. Why is that? Well, if you understand the market here, you understand on the weekly chart, look at this. Why did the market stop here? Remember, these zones are put in ahead of time before the market even gets there. This is supply. Remember, big moves down. Look at this, 3 big bars down. Look where the market stopped dead and turned to the downside. It's turning down. It's not down yet. And again, these are trades that we've taken in our trading room and we've called out. We've had some members of the trading room actually done really well on them. We called the pound down on the long side here with targets of down here around 1.2 level, targets at 1.3, 1.4, and we're looking for 1.5, which may go this year, the pre-Brexit number. But shorter time frame, when you're in supply, this is not the time to be on the buy side. Down here, you want to be on the buy side earlier on today. Down here, this is demand, and this is the move up. This was the trade in the London session to supply, and that's where you need to get out. If you outstay, you're welcome. Well, it goes all the way back down. You might end up taking a loss there. So you need to know where those levels are ahead of time. Okay, let's look at one more market. Let's look at Bitcoin. And again, Bitcoin, we've called almost every single move on Bitcoin, but most notably was this move, was the bottom over here. This was a bottom, and then when we came back down to this area was where you want to be on the buy side, and then over here was the next best buy, and Mike, who helps me run the trading room, bought Bitcoin around this $10,000 mark, and you can see the massive move from 10,000 all the way up. But we also had members of the room buying it around the 4,000, and down here around the 3,000, 3,500 level. Down here, and you see this is where the trend changed to the upside, and this is a buyable pullback. This is also buyable, and we've had a nice move up. And you can see smaller time frames where our levels are. This is demand, so when price comes down here, we pushed up, and now we're getting a bit choppy. So what I want to do now is share with you a success story over here. I had Jane, who came to me at the beginning of 2018, and she didn't know anything too much about trading. And she went through my training of what I'm going to share with you, how to read the trend. And she came into the live trading room and learned from the live trading room supply and demand and how we go through our analysis of the markets and how we find trading opportunities. And she managed to get from beginner to consistent profits in 3 months. And I'm going to share with you how you can actually connect with her on a day-to-day basis in our trading community as well. And this is what she said. All I can say to anyone who wants to consistently profit, just do it. That training turned my whole trading around. From that day on, my trading has been so consistent, it is really mind-blowing. Once you understand the levels and can read the trend, you will beat the market every single day. However, the key is follow the pivot analysis, use the demand and supply levels, and adapt it to your own trading style. Be very disciplined, don't be greedy, stop when you've made your daily profit, and you will turn losing trades into winning consistently day in and day out. Simon's training can be adapted to any market. I mainly trade the Nasdaq futures and oil. I use my own strategy based on Simon's education. I found the best thing was knowing what you are doing gives you the confidence in your trades, and the fear of losing was gone. Trading had become a lifestyle, no longer a binary gamble or a nervous hope job. Believe me, it's the best and only trading to succeed with. Now, the reason why I'm showing you this is because there's a lot of wisdom in this page. I would recommend, if you're watching this live, take a screenshot and read this again, or watch the recording and read that. There is the wisdom of how to become a consistently profitable trader in 3 months. Everything's here. Everything you need is in this page. Now you need to be able to put that into practice yourself. So now you've seen a simple and powerful approach to reading the market. If it's okay with you, I'm going to share with you an offer I put together to help you know exactly what to do to achieve mastery of reading the trend, which is the first stage of understanding how to read a market professionally based on price action alone. Remember, this works in any market on any time frame, as long as you can have Japanese candlestick charts, which are, most trading platforms or charting platforms have that nowadays. You don't need anything special. No special indicators, just the charts. And you train yourself to start seeing what you need to see, those levels and the trend and price direction. Put it all together on multiple time frames. So what I want you to do is take it a step further and learn how to read the trend using pivot analysis. And these are the benefits. You'll trade in the direction of the trend. The trend is your friend until the bend in the end, and that's usually where it meets supply and demand. You'll know exactly when a trend begins, which is not a bad idea of getting into a trend. Once it begins, that's when it begins, but more importantly, when it ends. If the trend ends and you're in an area of an uptrend and you're in an area of supply and then price direction changes to the downside, you've got 3 reasons why you want to be on the sell side or at least get out of your buy trade. And make sure you're never fighting the trend. Wouldn't it be a good idea when you're getting into a buy, for example, if you want to buy, you decided it's going up and you wait until the short time frame trend breaks, the downtrend breaks. Wouldn't that be a good thing? You're now no longer buying against the downtrend on the 5-minute chart, for example. And here's the good news. Make sure you're on the right side of the market. You'll be able to develop a profitable trading strategy understanding this or enhance an existing trading strategy. So what I'm going to do with you now is share with you how you can join my How to Read the Trend training session and trading room. And this is what you're going to learn. You're going to learn how to identify the current trend of the market, to analyze the trend on multiple time frames. So we give it like what I call 3-dimensional analysis. Exactly when a trend begins, exactly when a trend ends, and how this knowledge will dramatically affect your bottom line. And you'll see it for yourself. Once you understand and put these concepts into practice, your trading will likely turn around. And you can watch us analyze and trade the live markets in real time every single day. I'm going to share with you how you're going to do that very shortly. So here's what people are saying. Thomas, How to Read the Trend is awesome. That was the most informative training about markets I have ever seen. Francesca, when I first watched How to Read the Trend module, I must admit that I did not appreciate the power of pivots and their interrelationship with supply demand. Honestly, I thought it was more of a good education module for beginners, talking about what a candle is. And that, of course, I was smart enough to be able to read the trend already. I decided to rewatch the first module, the first education module. Now I can see that it is really a lot more powerful than it first appeared to be to me. And it is quite deep. Sometimes we don't see what's right in front of our noses, as the old saying goes. I would say now that I know things about reading the trend that I did not have a clue about before your first module. The first thing I'm thinking is, why didn't I do this 25 years ago when I started? Johan, as a new trader, I jumped from one strategy to another, always looking for the magic source. I literally spent thousands of hours in various forums, blew up numerous accounts and bought tons of online courses. After a while, I realized that most of this material was produced by people like myself, wannabes, without experience, who want to survive while learning how to trade for real. What struck me when I came across TradeSmartForex.com and Simon's material was his true understanding of price action. He managed to condense all of this vague and ambiguous information into a few clear and fundamental set of rules and principles. I have to date probably seen his material a dozen times, and I always discover new details that are key in my now profitable trading plan. When people ask me for advice, I always say that Simon and TradeSmartForex.com offers everything you need, nothing more, nothing less. I'm sure that his genuine interest in you as a trader will enable you to reach your goal far more quickly than most other alternatives. Tom, I want to say I think what you're teaching, How to Read the Trend training course, is brilliant. Before that, I had picked up bits and pieces from different traders, but it was never joined up. Your course brought it all together in a very structured and algorithmic way. No guessing needed. The facts jump off the chart. You are a mastermind. And finally, Matt, the trading room is very helpful in understanding how to go through the process. I've been trading for 11 years and I've not seen anything like what you do. Love how simple it is. I mainly trade options with trades that last 30 to 60 days. I've been looking for something that I could use to day trade for 2 years now. I want to round out what I'm doing with another source of profits. I have not been able to find anything I could execute consistently. I've been doing it for a couple of weeks now, and I've had far better results than anything I have ever tried. So let me go through with you what you get in this training. It's about an hour and a half, usually costs $397. It's on demand. You can watch it as many times as you want. You get personal access to me. You can follow up with any questions you may have. And also, you're going to get 1 month access to the live trading room. And that's a subscription. It's $497 a month if you do it on a monthly basis. Plus, you also get access to our online trading community, which is 24/7 via our Discord server. And again, Jane's there. and other successful traders. Mike's there, and we have other money managers that are in there as well, some very successful traders, and you can ask them questions. Sometimes we trade live together, not only in the trading room, but sometimes in the Discord server. We go live and everyone can come in and watch. We share screens, and that usually happens on a Friday, actually. We can trade the NASDAQ open, the cash open, the futures market. Sometimes we do that. Sometimes Jane comes in and does that and shares with everyone live what she's doing. So this is what it looks like, and we share our trades, best trade, worst trade, and we've got various different voice channels over here and text channels. So you can chat, you can voice and video with other people if you want, much like on Skype or WhatsApp. So here's the offer. Again, Anna, if you want to put the link in the room, if you join now, the regular price is $894. Is usually that. The deadline Sunday, March the 7th at midnight Eastern time. You're going to receive $497 off, basically 1 month in the live trading room. It's free. And basically today you pay just $397. So go to this link. And again, you won't be able to click on this if you're watching the recording. So just type it into your browser or click on the link that Anna's posting into the chat area. So it's TradeSmartForex with the number 4.com/promo. I'm going to share with you the actual checkout in a second. So go here, and if you join now, how to read the trend is $397. 1 month in the live trading room is $497. The total's $894, and go to that link, TradeSmartForex.com promo. So what I'm going to do is share with you what you get on the inside. So you can go to my website, and basically, if you get access to this, you just need to click on members, and it will bring you to the membership area. So basically, you come to this page. So again, click on the link that is being posted in the chat area. Okay, go follow through with me so you understand what to do. So if you click on buy now, you can read all this. It's basically what we covered in this session, and it will tell you everything we're gonna cover. This is session 1 of how to read the market professionally. It's a standalone session. You can do this by itself. It stands by itself. And again, this will give you a taste of the training and to see if this is for you. Plus, you'll gain great value from it as well. So click here, and it will bring you to the checkout. Now, fill in all your details, and you can see over here, just want to point your attention, it says $497 monthly. But basically, that's not until now you pay $397. After the first month, if you don't cancel it, it will bill you again, but you can cancel anytime. You can get it and cancel it immediately so that you don't have to worry about canceling it and it being, if you don't want to carry on after the first month. So yeah, so that's basically what it is. Fill out all your details, and you'll get an email sent to you with your login credentials, and then you can go to here, or the link in the email, and it will bring you to our membership portal. Everything to do with education and training is over here. So how to read the trend is part of Learn How to Trade Professionally, and it's session 1 of how to read the market professionally. So it's in here. Everything to do with the trading room is here. So if you go into the how to read the market professionally, which is here, how to read the trend, you'll only see what you have access to. So you'll see how to read the trend, and you can start it literally immediately right now. Everything to do with the trading room is here. We have a live trading room. If you want to come in live, it's got a schedule, everything. If you can't make it live, or if you come live and you want to watch it again, we have the recordings over here of each daily session. And then we have our weekly preparation session, which is basically a standalone also, but it's part of this package as well, where we prepare our charts ahead of time and have a game plan for the week of what we're likely to do, what the market's going to do, what our levels are. And we go through from the bigger time frames as well, down from monthly, the weekly, and the daily. And then intraday, we go down to the daily 4 hour, 1 hour, and down to the 15 and 5 minute even. So that's basically what you have access to. So to recap, how to read the trends, $397. 1 month in the live trading rooms, $497. Total is $894. That's the link, and click on it in the room. And I look forward to seeing you in the trading room. Our next session is on Sunday. We don't have a session on Friday, but you can join the Discord server and immediately connect with other traders, and maybe join a live session that may be happening tomorrow as well, and trading the NASDAQ at the market open, the cash open. So what I'm going to do now is to ask if you have any questions, and we've got about a few minutes. Okay, so if you have any questions, feel free to type it in the room, and I'll go through them now. Hi, Simon. Is a trading room open during New York or London trading hours? We're open usually during the New York trading hours, and yeah, but we can trade on or share ideas during the London trading hours on Discord. So we trade usually the Forex market open, which is 8 a.m. Eastern time. So our trading room usually starts at 7:30 a.m. Eastern time, and we're usually done in about an hour by 8:30. So we trade the open, and then later on in the day, you can trade the cash open and the US market open at 9:30. We don't have a live trading room for that, but we can do that in our Discord. And the London also through Discord. Sometimes some of the traders in the room get together and they trade together. They share the screens and they work together. So again, you've got a community. You're not doing it alone. It's good to have that support. You can ask questions. You can ask people what they think of the charts. There's some very experienced traders in the room as well. We have some traders that have been trading 30 years, 40 years even, and 10 years, 20 years. And then we've got complete newbies as well. I want to say a huge thank you to Anna and the team. And thank each one of you who's here live, and for those of you watching the replay, thanks for watching it. I hope this was a good use of your time, and I hope you learned something that will help you on your trading journey. And I look forward to see those who have joined in the live trading room on Sunday. And enjoy the training. If you have any questions, feel free to email me at simon@tradesmartforex.com.